Assalamualaikum and good morning. Today we will present our case study on Malaysia Airport Holding Berhad or MAHB. We will discuss the challenges faced by the company during COVID-19 and the strategy implemented to overcome them. Let's begin.
So my name is NURFAHIM. So I will talk about our group introduction. So Malaysia Airline Berhad manage 39 airports in Malaysia, including KLIA and KLIA2. The next one is the COVID-19 caused a sharp decline in passenger traffic and airport revenue. So despite lower revenue, Malaysia Airline Berhad still had to maintain airport operation and services. The next one is the company implement cost cutting, restructuring and digitalization strategies to overcome the company crisis. And the last one is is a report examines the impact of COVID-19 on Malaysia Airline Berhad and its recovery effort. That's all.
Now look at the main problem faced by MAHB. During the COVID-19 pandemic, MAHB faced major challenges due to travel restriction and border closure, which caused a sharp decline in passenger numbers and revenue. Despite lower airport activity, the company still had to bear high operating costs, resulting in cash flow and liquidity issue. MAHB also faced financial risks airlines and retailers struggle financially. This challenge threatened the company's financial sustainability, making effective cost management essential for its survival and long-term growth.
For the financial analysis, as it was shown here for the current ratio, during the pandemic year, the margin are decreasing, and after the pandemic, the margin are increasing again, which means that the company are recovering their liquidity assets. As for the current quick ratio, same as before, during the pandemic year, it decreases and after that it increases. This means that MAHB have a stronger cash positions after the pandemic year because of the lifted ban for travelling. For the gross margin, during the pandemic year, the percentage are increasing, yet after that it decreases, which doesn't mean a lot because the margin are stable, but it means that after the pandemic year, the company are faces with low inventory costs because of the losses. For the net margin, for all the 4 years, the margin are increasing, which means that the profitability for the company is restored. As for the return on assets, same as the net margin, the margin are increases for all 4 years, which means that the assets return are recovered. As for return on equity, it also faces an increase during all 4 years. This gives shareholders value. This means that shareholder values are restored and the shareholders regain back their interest. As for the debt ratio, during 2022 until 2023, it faces a decreasing in percentage, which means that the leverage are reduced and the debt are lowered even after the pandemic years. As for time interest earned, the company faces an increase in the margin, which means that the interest coverage has regained from before the pandemic. As for the earning per share for the company, the margin shows that during the pandemic year, the margin are decreases, and after that the company margin are increased, which means that shareholder earnings have returned by 15.8%.
The COVID-19 border closures caused passenger numbers to collapse, drawing up both aeronautical and non-aeronautical income almost overnight. To survive high fixed infrastructure costs, management executed a rapid response strategy centered on our critical pillars. The second one is MAHB focus on strategic financial management to secure liquidity. To avoid high interest bank debt, they raised 5 billion ringgit by issuing sukuk wakalah, or named as Islamic bonds. This capital injection allowed them to safely fund operations and meet financial obligations during long stretches of near zero revenue. Proactive communication is also protected their investment grade corporate status with RAM ratings, preserving affordable credit for access. The third one is the crisis accelerated MAHB digital roadmap through the Airport 4.0 initiative. To rebuild a passenger trust, they deployed a single token facial recognition biometric system at KLIA 1 and KLIA 2 for contactless check-in and boarding. To support retail partners and capture non-passenger revenue, they launched Shop My Airports Malaysia, first travel retail e-commerce platform, allowing consumers to shop duty-free online from home. For the last one is MAHB focus on workforce and ecosystem management. By utilizing the government's wage subsidy program, they avoided mass layoffs and protected specialized technical talent. They also launched the network reconnection program to offer a financial incentive to critical airline partners. As a result, MAHB successfully bounced back from massive losses in 2020 to achieve a core net profit of 5,043 million by 2023. Remarkably, they maintain the high service standards, with both major terminal earning elite rankings in global airport service quality.
Based on the challenge faced by Malaysia Airport Holding Berhad during the COVID-19 pandemic, our group proposed 4 main recommendations. First, MAHB should diversify its source of revenue. During the pandemic, the company relied heavily on passenger traffic and aviation-related activities. Therefore, MAHB should expand non-aeronautical business such as a cargo service, logistics, digital advertising, and property development to generate more stable income. Second, Malaysia Airport Holding Berhad should improve cost efficiency and operational flexibility. The company faced high operating costs even when passenger numbers were very low. By implementing smart airport technologies, automation system, and prioritizing essential projects, MAHB can manage its resources more effectively during future crises. Third, MAHB should strengthen its financial management and emergency cash reserve. Maintaining sufficient cash reserve and improving financial planning will help the company remain financially stable during unexpected disruptions such as a pandemic or economic downturns. Finally, MAHB should strengthen stakeholder and risk management strategies. Since MAHB work closely with airlines, retailers, and government agencies, strong collaboration and effective risk management are important to ensure business continuity and maintain investor confidence. Overall, this recommendation can help MAHB improve its resilience, strengthen its financial position, and better prepare for future uncertainties.
The COVID-19 pandemic hit Mahb finances hard. Travel restriction cut income and created cash shortages, resulting in revenue drops and net losses. Mahb cut costs, restructured debt, and grew digital businesses to recover profits by 2023, helped also by rising travel demand. Since Mahb relies too much on flight passenger, it needs new income for logistics, e-commerce, and property, plus tighter cost and risk management. Overall, the pandemic exposed Mahb business flaws, outgoing structure challenge, and diversification will secure its long-term stable growth.